Hi, my name is Roger Schluter. This video is actually about the SBA 504 fees that are allowed and the ones that are prohibited. There aren't too many that are prohibited like on the 7A. But on the 504, some people think there's quite a few fees, but a lot of these fees are done really to make you get, the 504 is a little different. You do get a fixed rate over 25 years, which people don't really realize sometimes. Anyway, this video will cover the fees that are included in a typical SBA 504 loan. I'll also show the bank fees that are prohibited by the SBA. The SBA wants the note to say certain things and cannot say certain things. So if you stay till the end, basically end of the video, I'll actually show you an example of the fees that are charged, on the 504. We'll run down all of them. Anyway, if you have any questions or if you got any video ideas, please go ahead and put them in the comments below. A lot of times, my idea of content and your idea of content might be different. So anyway, if you have any things that you want me to cover, I hope you go ahead and ask those questions or state that fact. Anyway, the SBA 504 loan is a loan that utilizes bank financing for approximately 50% of the project cost. The borrower usually puts in equity of 10% for an existing company, but it can go up to 20% under certain circumstances. The SBA therefore is financing anywhere from 30 to 40, usually 40% of the cost of the project. The SBA portion is a fixed rate for up to 25 years. That's a heck of a deal. To get this fixed rate for 25 years, there's fees, and that is what I'm really going to cover here. I did another video on the 7A fees, and this one will cover the 504 fees. The SBA basically has three classifications of fees. First, there are the fees that are added to the SBA portion, and the SBA portion is called the net debenture. That's that SBA 30 to 40, usually 40% of the loan. After the fees that are added to the net debenture, the SBA portion is called the gross debenture because it has the fees in it. The second fee is the third-party lender fee. This is, it's called a third-party lender fee, but actually the borrower pays it. There was a time when only the bank would pay it, but banks don't pay fees, so they pushed it off on the borrower so long. The SBA said that's fine. Anyway, this fee is actually 0.5% that is levied on the bank portion of the loan. This fee has to be paid before the SBA closes in a loan. And it does not have to be paid that early. I mean, we've been, closing the 504 loan and ready to send the documents to SBA, and we've paid that fee. So anyway, the third fee are the ongoing fees that are charged during the payback of the loan and are incorporated into your loan payment, by SBA. And they are service fees, number one, and then there's a spread over the 10-year treasury that they basically sell for. So the 504 loan is really priced on the 10-year treasury. Now again, the debenture is 40% of the SBA portion of the total cost of the project. The bank portion is 50% of the total cost of the project, and the borrower pays equity, usually around 10%. And this 40% is called the net debenture until the fees are added, that is called the gross debenture. Third, there are approximately 3% of fees that are added to the net debenture to come up with the gross debenture. These fees are, and I'm going to go ahead and say here, the SBA guarantee fee, a funding fee, the CDC processing fee, the CDC closing fee, and an underwriting fee. These fees add up to approximately 3%, but on a larger loan it could be a little less. A smaller loan, it could be a little bit more. But this really adds up about 0.75% or 75 basis points to the interest rate on the long-term interest rate for 20-25 years. The SBA 504 prices the interest rate as a spread over 10-year treasury bill rate. This spread is approximately 1%, but can be higher or lower. You're going to see in an example, it's like 0.2 or 2 basis points more. The servicing of the loan adds another 1%, and it's approximate. The third-party lender fee is 0.5% levied on the bank portion of the loan, and this equals approximately an increase of about 0.125% over the life of the loan. Let's add up these fees to see really, the all-in effective rate on this loan. The net debenture fees are 3%, like I said, and they basically increase the interest rate about 0.75%, and that's over the 20-25 years. The third-party lender fee is 0.5%, and that increases the rate about 0.125%. Increase in the interest rate over the 20-25 years. And then number 3 is the spread over Treasury and the servicing fees, and these are approximately 2%. The spread is about 1%, and that can vary. The servicing fee is approximately 1% also. So anyway, the total effective rate, if we want to go ahead and basically add this up, the total effective rate, and we're going to use a 10-year Treasury rate of 3.84%, because that was basically the October 2022. That was the rate at that time. The 10-year Treasury rate was 3.84%. The spread over Treasury at that time, which is kind of right now, is a 1.2%. I told you it could be a little over that 1%. And then the service fees are basically about 1%. The upfront fees that are added to the net debenture to become the gross debenture is about 0.75%. And then the third-party lender fee is approximately 0.125%. So anyway, the total effective rate then is, if you add those up, is 6.915%. So anyway, and that is the rate that someone would pay, in the middle, if they sold it in the middle of October. And when they sell the loan, they actually they come up with a rate for that month. So these loans that were sold where everybody gets their money like October 15, those would we'd have to have all the SBA information in by the 1st of September. And then the SBA puts all these together, and then they go ahead and put all the loans together and then sell those debentures. And then and that's where they come and they go ahead and pay off everybody. So anyway, I told you I'd tell you some of the bank fees that they cannot have. The bank basically agrees not to allow future advances in the loan amount, and that would be, sometimes banks allow if they pay down a loan, they'll let them bring it back up. They don't allow that. The SBA doesn't allow that unless you get approval from the SBA. Number 2, the loan to be cross-collateralized. They do not allow that either. The SBA wants the only collateral to be the property or the equipment that is financed. The bank agrees also not to have an early call feature, and to also not to be payable on demand. There is one more thing. They really cannot have a prepayment feature. They actually can, but when they sign the intercreditor agreement with the SBA says if they do, then the SBA will take that prepayment penalty. So I don't think they want to do it for the SBA. So usually the banks don't have a prepayment penalty. So anyway, the bank also agrees to provide the interim financing, and the bank provides not only their 50%, but they also provide that 40% until the SBA closes, and then the SBA takes that 40%, pays down the bank, and then you have that new loan with SBA, and then you also have a loan with the bank. So anyway, if you like this kind of content, I hope you subscribe. Hit the bell for future notifications of videos that I'm going to be doing. And also please hit the like button if you really found any value in this. And my name is Roger Schleter, and I will see you in the next video. Thanks.